Bud says, doesn't the RSI showing overbought help indicate that the pullback is coming? Yes and no. And I would say, let me try to explain yes and no. So the RSI being overbought doesn't mean that a pullback is coming, right? The RSI being overbought means that there's a massive amount of bullish strength in the market, right? So first and foremost, we need to understand that the relative strength index is an indicator of not, I used to think it was called the reversal strategy indicator. That's how dumb I was when I was starting off, because I just like, oh, as soon as it goes overbought, you sell it. So it's the relative strength index. So it tells us how strong the market is. The stronger the market is, the higher it will push. Although because it has a ceiling and a floor, it can't go past 100. Obviously, the closer it gets to 100, the more it takes to push it closer to 100. So, excuse me, it's easier for the RSI to move from 40 to 80 than it is from 80 to 100, for example. That's just how it's weighted. So the RSI being overbought doesn't mean that the reversal is coming at all. However, right, and this is where it gets a little bit confusing, we can make that prediction, Bud, that once something goes up, like it eventually has to go down, right? Like nothing can just go up forever. Like you throw a football in the air, you kick something in the air, right? It's going to reach an apex at some point and then it's going to reverse. So although the RSI being overbought doesn't indicate that a pullback is coming, we can assume that a pullback has to come at some point, and perhaps it's more likely to occur the more overbought or oversold we get, because eventually it has to take a breath. Now, the issue is, when does it take that breath? And that's what the RSI won't necessarily tell us just by overbought, oversoldness. So we can be prepared, like, okay, we should probably expect some type of pullback, some type of relief, right? Because what goes up must come down, but we don't know when it's going to happen because the RSI can be overbought for a very long time. I mean, you look at this example. The RSI was overbought so many candles ago. You'll see so many cases where the RSI was overbought. Like, look at this right here, for example. Where we look at the RSI initially went overbought right here, right? Let me grab this candle for you. Right here's when the RSI went overbought. And you can see that it even retraced. It went not underbought, but it went crossed back under the overbought area and then continued up, right? So we just continued going up the entire time. So we were overbought for a very long period of time. So that's why we want to use the RSI as a clue. In my opinion, it should always be secondary. We want to use the RSI as a clue, but ultimately price action and for me, structure analysis should be the bigger determining factor of us predicting when and where that exhaustion is going to happen. So we can use our structure analysis to kind of predict the area of where we should see exhaustion. We can use price action analysis and candlestick pattern recognition to look for clues in the market, like that say, hey, this is going to happen now. So the RSI is kind of like a hint. So we'll give an example. So like if I see the RSI overbought, right? So we may say the RSI is massively overbought, boom, we may see a reversal happening. Let's say that we're also at a level of structure right here, right? So now we're at a level where, okay, we're at a level of structure where I know how buying and selling pressure looks. This is works. This is an area where I would expect a reversal or an exhaustion to come at. The RSI is overbought, massively overbought, which tells us, hey, we may be getting to that point. And then I also combine that with, let's say I get a pin bar, right? Because what does a pin bar tell me? What story does it tell me about the market, right? For you guys that went through the foundation course. What does this candlestick tell me? Well, this candlestick tells me that price action, not a pause necessarily, but a rejection. Price action, bulls buying pressure, tried to push up, got smacked in the face, got defeated, and we closed lower. So now I've got the candlestick formation or combination, if you want to add more to it, right? Just for example purposes, we have a candlestick formation that's pointing to us exhaustion. We're at a level in the market that is pointing to us exhaustion. We got that RSI that's giving us this clue of exhaustion. Now those three things combined, now we can build a better case with those three things versus the one, right? So that's how we want to use it. We always want to use it as a kind of a compliment. It's a poke in the shoulder, like, hey, Keel, hey, watch, just pay attention because this may be happening. But we also want to wait for confirmation of the other things before taking action on it. Very, very good question, bud. I love the RSI. It was the only indicator on my chart. Well, aside from I guess technically the ATR is on there. But yeah, very, very, very good question. So doesn't indicate that a pullback is coming. It's a clue that a pullback will come. But it doesn't tell us when. Then if you want to get more complicated, yeah, you can like divergences. Now those would be more powerful clues in my opinion. Divergences, right? So when you start seeing RSI diversions, stuff like that, or if you get RSI diversions after an overbought, oversoldness, now those are different clues that the RSI uses. There's some really cool, we're not going to get into it. I usually go on like a 3-month rant every year, but there are some other really cool ways you can use the RSI. We call them RSI zones, where, again, I'll try to be as simple as possible. What you do is you basically create not buy and sell zones, bullish and bearish zones on your RSI, where if price is within a certain zone, so let's say above the 30, right? This indicates bullish trend. If we're below here to here, this indicates bearish trend. And based on the ebbs and flows of where we stay and what we do or do not violate, that can tell you or give you clues on whether we're still in a bullish trend or not. So this example right here, we come from a bearish trend because we're below the 33, right? We pop up, we cross over into bullish territory. We retrace, right? We do not violate the 33.3, right? So as long as you don't violate this 33.3 here at the bottom, we're still in a bullish trend, right? So all of this is still a bullish trend until we violate the 33.3. If we violate that 33.3, right? So just like how we would look for a break and close on a price chart, once we violate this level, this would be an example of a rotation in trend. And then what you would look for is you would look for price action the RSI to retrace again, but that RSI must remain below the 66.7. Again, just roughly drawing these on. So if we do this, now we have a legit pullback, and now we're in that bearish trend. Again, staying in between that 66 level and that 20-year level. For the bearish trend, stay in between that 33 level and that 80 level for the bullish trend. Or you can do 60-40 if you want to make it kind of simpler. There's all sorts of fun stuff if you guys really want to get nerdy with the RSI. Again, I'm sure at some point usually once a year, I start, usually during the summer when things get slow, we start digging into kind of using it this way. But this goes into what I've always said about, so quality over quantity, right? So you don't need to use a million things. Just use a few things really, really well. Most traders don't unlock the true power of their indicator, right? So two things. One, usually the default setting of your indicator isn't the greatest way to use it. Two, usually the default way or the way that we're taught to use our indicator isn't the best way of using it. So again, just a simple one with the RSI, right? I would argue that divergence in the RSI is more important than overbought, oversold. But the traditional way of looking at the RSI is what? Just overbought or oversold, right? Or you look at stochastics, for example, or a MACD or whatever indicator you want to use. I would advise this for anyone that uses indicators. Take some time to learn about your indicator. You don't need to know like the coding behind it and the formula and stuff like that. But take some time to really understand what the indicator tells you. A lot of indicators actually indicate something different than what you're being told, right? What you hear on the internet is just kind of like the dummy version of it. But take your time to understand your indicator and start researching different ways to do it. And part of it is just researching, go to a YouTube search. Part of it is just like tracking it on a daily basis. I've been trading for 16 years. The RSI has been on my chart for all 16 of those years. So you can imagine how much chart time I have with the RSI to notice tendencies. But the most creative traders tend to be the best investors and traders in the market. So when you find creative ways to use your indicators, when you look for clues that aren't necessarily being seen by others, you can unlock a whole nother level to your trading. It's really cool stuff, but easier to do if you're focused on a single indicator versus trading 10 indicators at the same time. But I would certainly advise doing that. You can learn some pretty cool things. But yeah, good RSI question, Bud. Got me on a nice little RSI rant. Yep, a piece of the overall puzzle. And I would say that with trading in general, there's no one thing that is magical. It's all about puzzle pieces. Yep. It's all about price plus this plus that. It could be fundamental, whatever it is. It's all about putting the different puzzle pieces together. And the more clues you have, the better detective you are, or the better case you can build. But it said like pressure in the pipe, sooner or later it's going to burst. It's not sure when. That's a perfect example. I'm going to start using that from now on. Yep. You never know when it's going to burst, but if you have enough clues, right, you can probably start being, okay, I think this is when it's about to happen, right? Just like that volcano thing we talked about last week where all those people got melted and they didn't use the clues to say that the volcano was going to erupt, and they had the clues in front of their face, like the steam shooting out of the water. It's probably a clue. I'm not a volcano expert, but that's probably a clue. Or the fact that it happens every 3 years, and this was 3 years since it last happened. Hope you guys enjoyed the video. I do have a part 2 of this video coming. Just didn't want to make this one too long. So make sure you check out the YouTube page tomorrow, or if you're not watching this when it first comes out, make sure you check out the video directly to the right or next to it, or whatever pops up on your screen after this.